following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Friday edition, Friday, May the 1st. I'm almost sure it was my parents' anniversary on May the 1st. Anyway, so, and May Day, that's right, it was also May Day. We've got the Dow up 131 at 17,971. The S&P up 12 at 2,097. You got the comp index up 36 at 49.77. You got gold down 10 at 11.72. Silver's down 14 cents at 16. You've got platinum down 12, but you've got high-grade copper, which has been acting amazing the last couple of days. At 2.93, up 4.40. This hard to explain. Crude oil down 65 cents at 58.90. You got bonds down 1.5 points at 158.04. You got the TLT trading right now at 124.37, down $1.58. That means that the yields are starting to rise. So we'll be looking at that in a short while. A couple of things here. We've got the dollar up 51 cents at 95.22, and the euro is down 0.06 at 1.1217. Very interesting session today, but most of all, I would say that for us here, the Tiger family, the Tiger's Den, the most impressive thing that we saw was Tommy Jr. joining Poppy Tom for the NASDAQ show at 10 o'clock Eastern Time. That was fabulous. That was really terrific. Bravo to the two of you, and bravo to Tom for being such a great mentor to his son. Now, let's go straight to the nitty-gritties, because, let me also just remind you, Steve Rhodes has a webinar coming up, 2 webinars coming up on the psychology of investing. The psychology of investing, really important. How to put your trades on, how to not worry about the trades because you've got everything in place. You know your stop, you know your positions, you know the mentality that's required to be able to get to those positions. Nice. Looking forward to that. I have the second of my series of webinars coming up, and that's on Tuesday, May the 5th. Let me see if I can just find it here. There's Steve's, and this is mine. So this is the 2 free webinars. You can archive the one that I did Tuesday of this week. Believe me, it is absolutely pertinent to exactly what we're doing right now. I have no qualms in saying that it will enhance your trading techniques, especially if you are just even a little familiar with the Chapman Wave methodology. If not, it's still pertinent. All the technicals there apply to pattern formation, so that you don't have to necessarily know the Chapman Wave sequence of counting the letters, etc., although that really does help. But most importantly, the second one will be the follow-up to the Market 1929 match that I was talking about February the 19th in that first webinar. I'm going to revisit it to see where we've come in this period. Do you realize that we've gone since March the 3rd, so that's the entire month of March, where the Dow made its all-time high at 18,288, to today. And we still, 2 months later, have not made a new all-time high with the Dow. So has this been a sideways consolidation that has essentially rotated through different sectors? You've seen, and I'm going to be discussing this on my webinar, I'm going to discuss the parallels now to the socioeconomic and political environment then. Remember, this is the women's suffragette movement coming to a climax at that particular point in the late 1920s. Remember, there was a ban on alcohol. Ban on alcohol. Everywhere you went, you could get alcohol. It's the same as with marijuana, the legalization going on. The parallels are extraordinary. And as far as real estate is concerned, in that whole summer of 1929, you got new forms of investing in both real estate and in the stock market. Remember, you might have read about those pools. We now have the same thing. We have pools. Fidelity has a pool, but it's slightly different. But basically, it's going to try to do the same thing. It's going to gather together a bunch of stocks and put them together as a almost like a little index that you can buy. This is such a fascinating period. I'll be discussing that, but most importantly, I'll also be doing the chart formations that are forming. So let's go to chart formations right now, and we'll check out my webinar coming up. This is the second one. As I say, you'll have the weekend in which to review the Tuesday one. It's just reviewable anytime, although some of the trades were put on worked out fabulously over the few days after that. Now, what's really important in this particular time frame is that the E-mini has gone to a peak E. The S&P at 2119.75. That was on the 25th, was it? The 27th of April. Has pulled back underneath the 9-period moving average, and today the 9-period moving average of 2095 was exactly the resistance at the high. 2095.30 is, well, it's not geared to the futures, but it's 0.30 is the 9-period moving average resistance. Where did we go today? We went 2095.50 in the futures. And what's important is that the patterns that I spoke about on Tuesday night, the cup formations, the arch formations, finding the midpoint. Look at this midpoint right here in the S&P, from that side of the cup to that side of the cup. Look at this larger one forming, which says that by next week, sometime middle of the week, we could be testing 2064.50 in the S&P if we take out by Monday. This time on Monday, if we've broken down instead of rallying to make a leg D in the E-mini, but we start at any point, in fact, early next week, if we start to take out 2084 in the S, 2084 to 2082 key support, you're going to start seeing this come down, and then we're on our way towards testing that left side 20.6450 low of mid-April. So, and then on the upside, it shows you here that this arch formation is being challenged by these cup formations. So we're going to see, is there enough energy by the end of the day to see a sudden up spike? I still believe that we've begun. We had begun at the beginning of March some kind of rotational correction. I believe that correction's going on. I also believe that there's a good chance that within the context of the rotations that we've seen pretty significant tops in some of the sectors. And I'll be talking about that as well. Now let's go to the nitty-gritties of it. I had a question which actually is pertinent to the market, question about Apple. Yes, the answer is, well, let me just move this way. That's a rogue wave in the Chapman wave methodology. Oh, I haven't got the chart up. I should have it up. I'll try to get it a little later on. In the Chapman wave methodology, this is called both a smooth PG as well as a right arm extension and a rogue wave, where you get an earnings announcement or some kind of news event that, as the market was about to turn down, the 120-minute chart giving you a great, especially with that silent Chapman wave silent doji there on that candle of Apple at 13:30. It's 1:30 in the afternoon on the 27th. What happened is, instead of pulling back, there was a sudden news event for the next day, whatever day that was, the 28th, I mean, Wednesday, and one, Tuesday, whatever day it was, and then it spikes up, but without any veracity, without any strength in the right shoulder of the stochastic, and then plummets down. And the whole rule of the Chapman wave rogue wave is that the bar that takes out the previous high to get those people to cover their shorts, and the people who got out and say, oh no, I should have been in, I should have been holding my long positions, gives them just enough time to get back in, and then whoosh, that same bar cascades to the downside, and within a bar or two, you've taken out the low and you're back on your merry way to the downside. And what happened? This 200-period moving average, this coral color moving average, becomes the support. And let's see if it's going to become resistance if Apple by Tuesday or Wednesday of next week is trading under 124. So the question I was asked was about the cup formation. Let me get the exact question. Just need to get rid of that. Get rid of that. and go to the question, which is, so Nita asks, could you discuss the cup and handle formation on Apple on Friday's show? At what level is the cup and handle of failure? 122? Okay, so here's the question. I believe that Anita's looking at, I think we're going to start off with the, we're going to start off with the daily. There it is. Daily, go to that bar there. Going to put in a right side. Time price match, does it hit? Bam, to the bar. That is just amazing. Right there. Oops, that's green. And that's red. Okay, so what we have is, and you remember the Chapman methodology, you take the lowest left sidebar over there, go to a peak and see if you can get yourself a time match. All right, there it is. Wow, look at the number of points of contact. That is amazing. All right, so Apple has done a whole bunch of techniques in the Chapman wave to go to the right side test of 133.60. It goes to 134. What was that? 134.54, and then why the price is not there? I thought I put it in 134. Did I say 54? Yeah. And then it breaks down. So this is the cup. It's a little too deep now for the cup and handle. It's more like the Chapman wave drop bucket formation. And the Chapman wave drop bucket formation, what you're really looking at is that you're looking at the price of a bowl or cup formation, taking out 1/3 to 1/2 of the lip, the bottom to the top. Usually I go to the top of the left side, which is 133.60, to this particular low right here of the 12th of March at 121.63. So in this area right over there, about 128.50, takes that out. You've got to be real careful, because what this pattern says, yes, you could make a double U, that is the U pattern twice. More important, which would be like a cup and handle with a very big handle, or a pair of reading glasses. But most importantly, look what happened. You took it out, and there's a good chance that once you do that, you are going to pierce or test the left side low bar of 121.63. So the answer is yes. If you take out 122, especially if you take out 122.63, you have to be very careful, because Apple could make a 1-to-1 to the downside, which would point, well, I usually do it in steps, but a pure 1-to-1 to the downside will go 134.54 to the 121 area. So you've got, let's call it 12 points. 12 points from that level would take you 12 points low, would take you all the way to the 109s, is it? Yeah, somewhere around the 109. I prefer to just go step by step, because now what I would do is I'd do the exact opposite. I draw a trend line. If I saw that break, my trend line would be doing this. We'd be looking at that as support. And there's a trend line. I'd be very conservative. I wouldn't go to that one. I'd probably go to this one right here. Let me just do this exactly the way that I normally do it. Oops, I just lost that. All right, during the break, we'll be back. Basil Chapman, Tiger Editions Hour. This is Friday, where we do a little bit more detailed work. I'll be right back after these messages.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive The Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. I'm just finishing up a chart here that I was asked about during the break. Scott's Miracle Grow Company, SMG. I'll be back there. Let's finish up with Apple. So Apple basically is saying that the cup formation that was in the larger cup formation in the daily is already broken down. So it's no more a cup and certainly not a cup and ladle, and it's certainly not a cup and handle. It is more that W shape, the soft W, like two U's put together. And it's going to say that's a possibility, but more likely you're going to take out 122 at some time in the next week and a half. And if you take it out, be careful, because both the daily and the monthly, and maybe the weekly, the daily and the weekly, but maybe the monthly, are forming. Let me just get rid of this because that's going to confuse the issue. Let me get rid of that. That was a help in the beginning of the month of April, but this is what we're looking at right now. You've got the cup formation even in the weekly chart, and that cup formation says I'm breaking down, and that's not good. And it says 9-period moving average, which is at 125.67. Is going to become more important if it's taken out next Friday. This coming a week from today, there's a close under the 9 EMA, because the following week would suggest that it could be a problem. So all I can say is that two things. One is you want to know about the cup and handle, no more in the daily. It could happen in the weekly, because you could have a bit of a rally next week and then start to make a little bit of a U-shaped cup over 3 weeks or 4 weeks without taking out It's already, well, this is just the right side of the cup in the weekly. So you have to wait. But let's just say you gap up Monday and you start to trade at 129.38. I don't know how that's going to happen, but let's just say above 128.50. And then you make a rally that takes 2 weeks or so. That would be like the right part of a cup and the handle. And then there's a breakout to the upside. Meantime, back at the range, you've got the monthly chart, which is F/B. And at this point, I have to stick with just the F/B as a continuation of the letters because the MACD is continued. And this particular pattern says, be careful because at some point you could go to a G, but maybe not alternate count D. So we've got to watch that. I'm just making it real clear. If Apple takes out 124, the next target down closes under 124 on the daily, the next target would be that 122 area support. Just make it as simple as possible. On the upside, it'll make the U-shaped pattern if by Tuesday, without taking out yesterday's low of 124.58, it takes out 127.97, the 9 EMA, not good enough. It has to take it out and push over. It'll have done that over the gap down 128.30. It really needs to get to the 129.70 to 130.10. Let's just be real clear by Tuesday or Wednesday of next week. All right. Now let's go back to something I was talking about a moment ago, which is SMG. SMG, which is Scott's Miracle Grow. That's the exact inverted shape. That's the U-shaped pattern inverted. To give you that lowercase h had made a peak D back in the daily chart at 69.27 on the 18th. 69.27. 69.27, and that is the March the 18th. Yeah. And it's come all the way down to 64. Was that around number 64? 64.02 on the 16th, a month later. And then what does it do? It rallies, forms the H pattern. This has the potential right now. The question was, is it a short? And my answer is no. Besides the fact, I don't like to take a short when it's actually the season. This is the growing season. I know I spent a ton redoing some of my lawn, a chunk of the lawn actually. So yeah, it's the season. So I don't see why. I don't think it's a short right now. I might be missing something, and I agree. Based on the Chapman methodology, the weekly chart is making the H pattern. The daily has just come off a higher low bar in the H pattern, which is okay, which is actually quite good. And the monthly chart hasn't shown any sign yet of deterioration. So just based on that, I would have to say, I've got to look at it as a Chapman methodology, and so far it's a successful test. So I don't want a successful test of the left side low. I don't want to be shorting it. In fact, I'd probably say to you, let me look at the 120-minute chart. A, B, C, D shows that he wants to make that pattern. I would even nibble on the long side. So the nibble on the long side would say 65.48. In the SMG, I'd make a stop. I wouldn't go to the low of the day. It has to work right away. By Monday or Tuesday, you need to be above the 200-period moving average of 65.82 in the 120-minute chart. Let me just do this because it's Tiger Technicians Friday. So here we go. Looking at the Chapman Wave methodology, this is peak. That's a peak. A, that can't be a peak because it was also the low bar. A, B, C, D, and then it turns down, makes the cup formation, makes the arch formation with a successful.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. On this coming Tuesday night when I do my webinar on the 1929 match, just today I didn't hear what he was saying, but there's some guy being interviewed, and there's a new Whitney Whitney Museum in Manhattan designed by Piano, the famous designer. He's the guy that did the Gardner Museum extension, double the Gardner. You remember Gardner Museum is the museum where they had that the Rembrandts, etc., stolen back in 1990, I think it was. I know that I had been, I conducted a concert 2 weeks before that, 3 weeks before that. I was always upset I was never interviewed. But anyway, the fact is that these things are just happening all the time. 50,000, Manhattan, 50,000 square feet of museum interior space, 13,000 feet outdoor space. This is incredible. If I remember correctly, the Whitney Museum was up near the Central Park, but now it seems to have moved somewhere else. And Rockefeller Center went public. You remember, Rockefeller Center, the papers were signed in July of 1929. Very interesting. I'm not saying that this is going to be the exact match, that we're in that exact environment, but there are so many similarities that we've got to be aware that at some point you're going to have to put your foot on the brake in the stock market. That's all, the most important thing. So I had a question here from Chris. Hello, Basil. On Wednesday, you began to talk about the comp index. That's the very broad 200 plus, 2,000 plus NASDAQ It used to be the over-the-counter market, but I believe you did not finish. Could you please do it again today? It's possible if there was a break, I probably didn't finish. Additionally, could you talk about your thoughts on how monthly end money flow affects the charts, especially relative to the Chapman wave Chapman wave methodology? Generally, should this, in theory, push the stock market up? In essence, if the market did not have a positive day-to-day by end, that would be especially negative. Question. Lastly, if the TLT is faltering, what type of confirmation or increased chances that the stock market goes up? Thank you, Chris. So, Chris is the answer to the question. Let me just try to do it as succinctly as possible. The comp index, CompX. Let me just move it away here. So this is A, B, C, D, E, F, blap. Comes all the way back to the 200-period moving average, just a little bounce as I see it. This is leg E. So there are a couple of things. The Dow made a peak in the monthly chart. The S&P did not. The New York Stock Exchange, I believe, made a peak. Now, what's really important about what's going on right now is that there's an alternate wave count in the, here we go, alternate wave count in the comp index, and that says that it should be F/C with a really good chance that it's an F. That corresponds to the NDX, the NDX.X, which is the 100, whoops, wrong place, NDX 100, and the Qs. Make it the Qs because the Qs are the ones I've completed. See, the Q's made an alternate count E/C. Very good chance, well, we'll know by the end of the day, that it's an E. Well, know by Monday, I should say. But most important, there's that cup formation. There's the spike through. That is a Chapman wave methodology, cup and ladle pattern, just a little longer than the left side, right side. No, it's exactly the same. Wait a minute. That should be there. No, a little longer in the Chapman wave, left side, right side, one bar extra. And then I took it out. If that is an E, it says you got to test the lip on the left side. You've done that, 109.42. It says that if you take it out and you make a pattern, which is the same theory, that says if you go 1/3 to 1/5 lower than the left side lip, you got to be real careful because you could go all the way down to the bottom. So that's the QQQ. Now let's go back to the comp index because I just wanted to do this because I hadn't quite finished the note. Now the notation says, good chance that I can put an inverted V-shaped pattern here to say that that really is like a down arrow, but you've already got a down arrow. So this is the next one, which is the inverted little carrot. And that it's under the 9-period exponential moving average. But the MACD, look how the MACD failed to confirm that rally so poorly. Look at that. Look at the stochastic how it turned down, up over the 80% line, then whoosh, down to 47%. There's not that much strength in the comp index. So here's the answer to the question. As far as money flow is concerned, you know, every once in a while I do something, they have it on, what is it called? Right there. It's the Warden TC 2000. He's done over the years, he's done fantastic work on money flow. I only use it periodically. No, I shouldn't say fantastic work. I should say done an incredible amount of work. I just don't know what the percentages of success. But I love the actual work, the thinking behind it. So it shows money flow. But I have just found that my waveform gives me so many more indicators in an objective way, especially if I'm reading it correctly. For instance, I've got an F/C. Well, F is negative, C is positive. How do you read that? Well, the technicals tell me, and the chart pattern says Eiffel Tower A, capital A, up and down. That's a very negative pattern. It's under the 9 EMA. My conclusion has to be I'm going to get rid of that C probably by the end of the day and call it a peak F to be in concert with all the other indexes. Being in leg E with the technical starting to fail in the, they're still good, but they're really actually starting to fail in the weekly means I have to watch it real closely. Today's the close, and by next Friday is the close. And then you've got the monthly. You remember this chart that I looked at? It's got until this month for a left side, right side, an unbelievable left side, right side price time match. Goes to the March 2000 high, at peak D, down to, in this particular instance, I chose a particular candle right there. I chose the high at peak E in October of 2007. And now we've got a price time match, which says that the 1, 2, 3, 4, 5, 6, 7, 8, it's almost an 8-year rally, 8-year time frame from the March all-time high to the low that was made in October of 2002 at 1108. So it's from 5132 down to 1108. That is a crash of major proportion. To the rally of 2861 in October of 2007, down to the low of March of 2009 at 1265. Are you getting a message here that you're going from October to March to October to March? And now what we've done is we've gone to March. It happens to be April, but last month was the high at 5,119. Just 23 points. Is it 23 points from the all-time high? That is unbelievable. Let me change that. What did I say it was? 5,000. Do I remember what I just said? 119, I think I said. I'll type that in and then double check. 5,000. Yep, 5,119. So isn't that incredible? And very often, as you get to the door of the previous major high or low, the door slams shut because you need more momentum to be able to break through it. So let's do this. I'm going to say that as far as I'm concerned, the money flow is not my area of expertise. There are a lot of people that use money flow and they use it very well. I'm just not going to get into that because I'd be gate crashing. I just don't know enough about it. And the other thing is, I believe that we're in separate camps right now, that the TLT, which is breaking down at minus 2.11 at 123.84, is in fact making that H pattern in the weekly chart, that really important H pattern. And that says to me, yes, we better watch this real closely, because if rates are going to, while they are independent, TNX, I don't think I'm going for the right one yet, doesn't matter. Let me go to the TBT. TBT, which is the inverted, has just extended leg D. Look at that. It was just 4 days ago it was in D. It's still in D and it's extending. Yeah, this is something to take quite seriously right now. It's still the arch formation, the lowercase h in the weekly chart. Monthly is barely moving in the TBT, which is 200%. It's the ultra short Lehman 20-year T Treasury note. So I'm going to go, let me do this. I'm going to leave it for the moment. I'll try to answer some of that. Then I had a question from another Chris about the E-minis, what the target would be. First, I want to go to Larry waiting patiently, Cheyenne, Wyoming. Cheyenne, I always think, is this the Cheyenne? Am I correct, Cheyenne?
Well, it's the hub of everything. You got to get here, Basil. It's a very pleasant place.
Well, I hear the name always, and then I see, and then do they call the Porsche the Cheyenne or the Cayenne?
Yeah, they had one of those. Yeah.
Yeah. So it gets confusing for me. All right, so.
Okay. I got a delay here. Okay. I'm calling about AMPE, and with your help, I'd called you on literally January 2nd on a little breakout bar, wave C up on the daily. I took a position and I wrote it up to the 0.27 expansion leg E. I didn't know what to do there, but I just let your system take me out when it got under the 9 EMA. I use 8 EMA on 325.
Wow.
But I'm calling because I'm watching this thing crater. I don't know what happened. I don't know how to interpret it, and I was just curious what you thought.
I can tell you one thing, that if this was the opposite, folks, we're looking at AMPE, Ampio Pharmaceuticals, Inc., and I also had a discussion with Larry that at the time that this thing trades like a biotech, in that it constantly has these cycles that look like a U formation, and then they go from the left side to the bottom, and then they soar to the upside, and then they break down, and it looks like news-related events. And the weekly had gone to a peak E, and I'd done for him, I've got this still notated. I forgot to look at it. but it was a notation of the left side high back in the week of October the 25th, 2013 at 10.86. And then what I chosen was the bar of the week of the 4th of July, 2014 at 867 to draw a horizontal line. And I made that line, I made a copy of the line. I've just changed it to green, but I made the copy of the line. And what I'd said to him, I remember this part distinctly, is that I have a time price match going to about the week of the 13th of March. I didn't know it was the 13th, but I said I have a price time going to somewhere in March. And look at this. This is one bar early. In fact, it came in one bar late for the high of peak E. And then it turned down. What I was going to say to you, if this was the exact opposite chart, I would have said, oh, yeah, this is easy. This is a takeover. And what's happened is it was at a certain point, it was at 8, and now it's at, what would it be comparatively? Now it's at 12, and it's a takeover, and that's why it's just holding until the takeover is fully completed and it gets the name change. It's just going to stay in this range. No. This had horrible news somewhere. There was a doji candle on the 17th of April at $7.97, closes at $7.87, and the next day you go to sleep, and you wake up, you think, wow, it's holding so nicely. It's holding the 9-period moving average. It's right on the moving average of the daily. It's way above the moving average of the weekly. You wake up and you look at it and you rub your eyes and you say, did I oversleep or is something going? Why is it trading at $3.30? Because something happened. Terrible news, and that's what happens with biotech stocks.
I was just trading it technically. There's no meaning behind. Other than probably horrible news, that's the meaning of this gap.
Well, the meaning is that we've got a peak E in the weekly chart, which failed because the stochastic was pulling back. The monthly chart already made a peak D, and all I can say to you is I have no idea. When it comes to biotech stocks, you got to strap your seatbelt on, and you got to be prepared for anything. Why? Because when they succeed beyond your wildest expectations, and they just keep rallying to a point where you can't. You rub your eyes the other way, saying I'm getting a stiff neck looking at this thing. Just rallying and rallying, and when it comes down, it does it in an hour. It closes one day, and the very open is a gap. Look at this, it's a 46% or something decline. So all I can say to you is whatever it is.
I checked it every day because I was waiting for a normal retrace, and I just was shocked. Yeah, that's right.
Because
what?
You would have called me. I would have said, if it pulls back and holds the 720 level, the 9-period exponential moving average support, and then starts to rally again, it would make the cup formation and try to go back, just like we were looking at Apple. We'll try to go back to the high. Wow. So you were out and you were saved this disastrous decline, and it kept going. It hasn't even tried to fill the gap by going above 330, which is the high of the day that it gapped down. It hasn't even come close. It's at $2.40. No. I would stay away, give it time. But with a biotech stock, it could be that they missed a particular deadline. They missed something that they had in the pipeline and didn't quite get approved. But you know what happened? Sometime, here it is. Pete in the Den says, injection for osteoarthritis failed. Oh, that's a shame. So many people have osteoarthritis. All right, so let me do this. Hold on a second, and
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back. So the Dow's up 104, S&P's up 10. And we're online still with Larry in Wyoming. And Larry, so this is what I'm going to suggest. Hold off for now, but keep your eye on it, because very often funding comes in, other things come in, there's certain things they have to change. Yeah. And I wouldn't be surprised if by the week of May the 25th to June the 7th, somewhere the last week of May, the beginning of June, after a little hiatus of them kind of figuring things out, there isn't a rally that starts in the stock just to get it back, so people who didn't have a chance to get out can get out at a higher price. But you could even trade that. So I'd be watching it for 2 reasons. One is, if it takes out $3.30, if it closes above that, then all of a sudden the 9-period moving average would become a little bit of a support. I could even see it rallying to 386. Hey, that's a 25-30% gain. So I'll be watch it, and maybe even next week you can give me a call, maybe Wednesday, just to see if it's worth nibbling. But it's because to be hit like this is a monster hit, so it has to have some kind of relief rally, and that's not a long-term trade, but it might be something to keep your eye on. Huh? Okay.
All right. Thank you very much, Basil. Have a good weekend.
Congratulations on your trade and getting out just in time. Let's go to Jim in Denver. Jim, how are you?
I'm good, Basil. Thank you. I was
Good.
just curious. You've looked at Kroger for me before. I was just curious if you thought maybe it had held that 68 level and
So that's exactly the level we were looking at. We said if it takes out the low on the left side of 69.08, it better do it just intra-week and then try to bounce back and close above it. That's exactly what we're looking at this week. So KR is the symbol. It's a 70.13 up 122. I'm going to make a recommendation now. This is the first time I can say it. I think because you still have your core position, right?
Yes.
Okay. I don't want you at this particular point to close the core position, but I'm just going to say, as part of your core position, you could take a very small position here at 70.16. Why? It's going to give you a really good feeling for the strength that's there with the market. If the market starts to turn down again next week, will Kroger hold up? Has it completed its down phase? Is this the first part of a down phase that's going to go up to the 72, 73 level, maybe 74, and then make a one-to-one to the downside? The monthly is very extended, but it's been a winner before. So I think something's gone on. If that something is corrected, I'm going to recommend a little bit now at 70.17. On this position, I would have a stop because it's only a small position of 67.95. If it can get by Tuesday to 71.30, Tuesday or Wednesday, without taking out today's low, that suggests that the weekly chart is going to have an attempt to move to the upside over the next 3 to 5 weeks, maybe as a defensive play. And that gives you a good sense of what you can do. Because if it takes out 68 on a closing basis next time, I'm going to say start thinking of your core position. Maybe give me a call, and we want to see what you're going to do with your core position. Okay?
Sounds good, Basil. Thank you.
Okay, good. And it's good that you held off because, look, it came down quite a bit. So this is a good time to go. Let's just look at ESMN as we're about to wrap up. Don't forget, Nico and Paige on your health coming right up. So what I'd said was my thinking was that if there's a failure and 2082 to 2078 is taken out by Tuesday or so, I suspect we're going to be coming down, and my target would be the first week of May to be retesting the 2070 to 2064 level. Chris wanted to know, could it go to 2040? My daily and weekly charts are suggesting that if we see the weakness I'm expecting next week, then there's a chance we could go down further. A lot depends on the close today. A lot depends on many things, but the sectors we've considered to be weak are still weak, and that's important. Folks, have a fantastic weekend. Please go to the front page of TFNN. Check out my Tuesday webinar coming up, the second of a two-part series. You might find it.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.